Something just broke, not in the gold market, not in silver, in the entire system that holds the global economy together. 3 days ago, the Supreme Court told the President of the United States that his trade policy is illegal. He responded by signing a new tariff in 24 hours that expires in 150 days. At the exact same time, Trump gave Iran a 10-day ultimatum: make a deal or face strikes. 2 carrier groups are in position, B-52 bombers are loaded, and the deadline is ticking down right now. Gold just broke 5,160s. Silver is above 80 centimeters. And if you do not understand what just happened in the last 72 hours, you're about to get crushed by what happens in the next 10 days. Stay with me, because what I am about to show you is not theory. This is a constitutional crisis and a war countdown happening simultaneously. Both of them are rocket fuel for precious metals. Now here is why these two events together are so dangerous. The tariff ruling creates fiscal chaos. $175 billion in potential refunds. A 150-day clock with no clear path to extension. Central banks looking at the US and saying your trade policy can be overturned by a court with zero notice. At the exact same moment, Trump is positioning for strikes on Iran, which means oil spikes, which means inflation, which means the Fed cannot cut rates, which means the dollar weakens. 2 forces, both inflationary, both hitting at once. That is the perfect storm, and gold is telling you it sees it. $5,160 is not a panic price. It is a repricing of risk, of uncertainty, of a system that is breaking in real time. Let me start with the tariffs, because what just happened has never happened before in American history. The Supreme Court of the United States just ruled 6-3 that President Trump's sweeping tariffs were illegal. Let me say that again. The highest court in the country looked at the tariffs that have been reshaping global trade for over a year and said, no, you do not have the authority to do this. The International Emergency Economic Powers Act, which Trump used to justify almost all of his tariff program, does not give the president the power to impose import taxes. 6 justices agreed. 3 dissented. It is done. Now you would think that would be the end of the story. Supreme Court says your tariffs are illegal. You take them down, you move on. But that is not what happened. Not even close. Within hours of the ruling, Trump held a press conference where he called the decision deeply disappointing. He said he was ashamed of the justices who voted against him, including 2 that he personally nominated, and then he did something that caught everyone off guard. He signed an executive order imposing a brand new 10% global tariff. Not under IEEPA this time, under a completely different law, Section 122 of the Trade Act of 1974. And here's the thing about Section 122 that most people missed. This law has never been used before, not by any president in the 52 years since it was written. It was designed for a short-term balance of payments emergencies. It allows a maximum tariff of 15%, and it only lasts 150 days before Congress has to approve an extension. So Trump signed a 10% tariff on Friday night. Then on Saturday morning, he posted on social media that he was raising it to 15% effective immediately, the maximum allowed under the law. In less than 24 hours, he went from losing in the Supreme Court to maxing out a backup law that nobody had ever used before. Here is what that means in plain English. Every company that imports goods into America just got legal whiplash. The tariff system they built their entire 2025 business plan around? Gone. Ruled illegal by the Supreme Court. The new system Trump signed 24 hours later expires in July. Nobody knows if it gets extended. Nobody knows if courts strike it down. Nobody knows what comes next. And $175 billion in refunds are now in play. The U.S. Treasury, already running a $2 trillion deficit, might owe $175 billion back to importers. That is the kind of fiscal chaos that makes gold do what gold just did. Break 5,160 while everyone else is panicking. Now let me break down what actually changed on the ground, because this is important. Before the ruling, the effective tariff rate on imports was around 16%, the highest since 1936. After the ruling and Trump's response, the rate dropped to around 7% to 10%, depending on the country. But it is still historically elevated. And for some countries, it is actually worse now than before. China, for example, had tariffs of about 45% under the old system. After the Supreme Court ruling knocked out the IEPA portion, they dropped to 35% under the new Section 122 plus existing duties. That is still massive. And the European Union, which had negotiated a 15% rate earlier in the year, is now sitting at the same 15% under the new blanket tariff. So for many of the world's largest economies, not much actually changed on the ground. The legal framework changed. The actual tariff rates barely budged. But here is what really matters for gold and silver holders. Uncertainty is not going away. It is getting worse. Before the Supreme Court ruling, there was one tariff regime. It was high, but it was predictable. Companies knew what they were dealing with. Now there is a 150-day clock ticking on the new tariffs. Nobody knows if Congress will extend them. Nobody knows if the courts will strike down Section 122 the same way they struck down IEEPA. Nobody knows what Trump will do when the 150 days expire. Will he let them lapse, restart them under a different emergency declaration, push Congress for permanent legislation? This is the part that I think most analysts are underplaying. The Supreme Court did not end the tariff war. It made it messier. It turned a single policy into a rolling series of legal battles, political negotiations, and expiration deadlines. And every single one of those creates uncertainty. Every single one of those is bullish for gold. Think about what the next 6 months look like from the perspective of a global manufacturer or central bank reserve manager. You have no idea what U.S. trade policy is going to be 5 months from now. You have no idea if your country's tariff rate is going to stay at 15%, drop to 0, or jump to something higher under a different legal authority. You cannot plan. You cannot hedge. You cannot budget with any confidence. What do? You buy gold. Because gold does not have a tariff policy. Gold does not expire in 150 days. Gold does not need congressional approval to hold its value. And that is exactly what central banks have been doing. Record gold purchases for 3 years straight, over 1,200 tons a year. That buying has not slowed down. If anything, what happened this week gives them more reason to accelerate. Because the message from the court's decision is clear. Even the most powerful country on earth cannot guarantee that its own trade policy will survive a legal challenge. That is not confidence building. That is the opposite. And I am not just saying that as theory. Look at what gold did the day of the ruling. It was already above $5,000. It pushed higher. Not because tariffs were removed, but because the situation got more complicated, not less. The market looked at the ruling and the immediate Trump response and said, okay, this is not a resolution, this is an escalation. And gold responds to escalation. Silver is in the same boat, but with an extra layer. Silver is both a safe haven metal and an industrial metal. The tariff chaos affects silver in both directions. On the safe haven side, uncertainty pushes money toward precious metals. On the industrial side, tariffs on imported goods, including metals and electronics, affect the cost structure of industries that use silver, solar panels, electric vehicles, medical equipment, missiles. Every single one of these industries is dealing with tariff whiplash right now, and every single one of them needs silver. Now, let me show you why the Iran situation is far more dangerous than the headlines are telling you. President Trump gave Iran a deadline, 10 to 15 days to reach a nuclear deal, or face consequences. His exact words were, "We may have to take it a step further." And when asked to clarify what that meant, he pointed to the U.S. strikes on Iranian nuclear facilities last June. Trump gave them 10 to 15 days. That deadline is about to expire. Iran's foreign minister says a deal is achievable, but here is what he is not saying. Iran will never give up its missiles, ever. Those missiles can reach Tel Aviv in 12 minutes. Israel will never accept a deal that leaves those missiles intact, ever. This is not a negotiation. This is two countries with survival-level red lines and zero room for compromise. And the U.S. military is staging the largest buildup since June right now. 2 carriers, B-52s, over 100 fighter jets. That is not a bluff. That is preparation. I need you to understand the context here. This is not just rhetoric. There are 2 aircraft carriers in the region right now, dozens of fighter jets. The USS Gerald R. Ford, the largest aircraft carrier in the world, just entered the Mediterranean heading toward the Gulf. This is the biggest American military buildup in the Middle East since the actual strikes last June, and Trump is putting a countdown clock on it. Now let me give you my honest read on this, because I think the media is oversimplifying it. The missile issue is not just about missiles. It is about sovereignty. For Iran, giving up its missile program is the equivalent of giving up its ability to defend itself. No country does that voluntarily. And the Iranian government knows that the moment they disarm, they become vulnerable to exactly the kind of strikes that happened last June. So when they say missiles are a red line, I believe them. That is not a negotiating position. That is a survival position. On the other side, Israel will not accept a deal that leaves Iranian missiles intact, because those missiles can reach Tel Aviv in under 12 minutes. For Israel, this is not about trade or diplomacy. It is about whether their population can survive a first strike. So when Israel says the missiles must go, I believe them too. That is the core problem. Both sides have positions they cannot abandon without existential risk. And the U.S. is stuck in the middle trying to broker a compromise that may not exist. Trump wants a deal because a long drawn-out military engagement is expensive and politically risky. But he also cannot accept a deal that Israel rejects. And Israel will reject anything that does not address missiles. So you have three scenarios playing out right now, and each one affects gold and silver differently. Scenario 1, a deal gets done, Iran agrees to nuclear limits, the missile issue gets kicked down the road, or some compromise is found. Sanctions get eased, the military buildup winds down. In this scenario, the fear premium in gold and silver comes down in the short term. I would expect a dip, maybe 3% to 5%, not a crash, but a pullback as the war risk disappears. Silver might pull back more than gold because the industrial demand story does not change. But the safe haven bid weakens temporarily. But, and this is important, even in the deal scenario, the tariff chaos is still there. The debt is still there. The 150-day clock is still ticking. So any dip from an Iran deal would be shallow and temporary in my view. It would be a buying opportunity, not a trend reversal. Scenario 2, talks collapse, no deal. The deadline passes and Trump orders limited strikes on Iranian military or nuclear targets. In this scenario, gold goes vertical. I'm talking $5,500, $5,800, possibly higher in a matter of days. Silver follows, but with more volatility. Oil spikes. The dollar initially strengthens as a safe haven, but then weakens as the fiscal cost of another military engagement becomes clear. This is the scenario that gold is currently pricing in a small probability of. If it happens, the move is explosive. And I need to be real with you about something. A lot of people in the gold community are almost rooting for this scenario. I get it. Your portfolio goes up. But I do not want anyone to forget that strikes mean people die. Countries get destabilized. Supply chains break in ways that take years to fix. I would rather gold goes to $5,500 because of monetary policy than because of bombs. But the market does not care about my feelings. It prices reality, and the reality is that military escalation is massively bullish for precious metals. Scenario 3, the most likely, and the most dangerous for anyone not positioned. The deadline passes, no deal, no strikes, just tension. Trump extends the timeline, the carriers stay, the threats continue. And gold does not pull back, because the uncertainty never resolves. It just sits there, week after week, month after month, grinding gold from $5,160 to $5,400, then $5,600, then $6,000. No dramatic spike that makes headlines, just a slow, relentless climb that leaves everyone who waited on the sidelines wishing they bought at $5,160. This is the scenario that builds generational wealth quietly, while everyone else is waiting for the right moment that never comes. I have been watching how markets respond to these situations for a long time, and the pattern is always the same. When there's a clear resolution, either war or peace, markets reprice quickly. Overshoot one direction, then correct. But when there is no resolution, when the situation just stays tense and ambiguous, that is when gold grinds higher steadily. No dramatic spike, no dramatic crash, just a slow, persistent bid that never goes away. And I want you to really sit with this, because right now we have both of those dynamics simultaneously. Tariff uncertainty that has no clear end date, and geopolitical tension that has no clear resolution, both at the same time, both feeding the same trade, both pointing in the same direction. I have been covering gold and silver for a while now, and usually you get one catalyst at a time. A tariff announcement, an inflation print, a central bank decision. One thing moves the market, then it digests it, then the next thing comes. What is happening right now is different. Multiple catalysts are stacking on top of each other faster than the market can absorb them. Supreme Court ruling Thursday night. New tariff Friday night. Tariff raised to 15% Saturday morning. Iran deadline running in the background the entire time. Gold and silver do not even have time to consolidate before the next headline hits. That kind of environment does not produce pullbacks. It produces staircase rallies. Up, flat, up, flat, up. Every new headline is another step. When was the last time you saw the U.S. in a constitutional crisis over trade policy and a military standoff with a nuclear threshold state at the same time? I cannot remember one. And gold is above 5,260 right now. Silver is above 8,700. Those are not panic prices. Those are prices that say the market sees exactly what I am describing and is quietly positioning for more. Now let me connect this to the bigger picture, because I have been making this point across my last several videos and it keeps getting reinforced by events. The fundamental case for gold and silver is not about any single event. It is not about one Supreme Court ruling or one Iran deadline. It is about the trajectory. Every major government on earth is running deficits. Every central bank is trapped between fighting inflation and avoiding recession. Every geopolitical relationship is getting more adversarial, not less. Tariffs, sanctions, military buildups, currency wars. The direction of travel is toward more chaos, more uncertainty, and more reasons to own real assets that cannot be printed, sanctioned, or ruled illegal by a court. And I want to point something out that nobody is talking about. The Supreme Court ruling did not just affect tariffs. It affected confidence in the dollar system itself. Think about it from the perspective of a foreign government. You're sitting in Tokyo or Berlin or Brasilia. You have spent the last year restructuring your trade flows around American tariff policy. You have signed deals. You have moved supply chains. You have adjusted prices. And then one court ruling wipes out the entire framework overnight. The next morning, a new framework appears under a different law with a 5-month expiration date. What kind of confidence does that inspire in the stability of the American economic system? What kind of confidence does that inspire in the dollar as a reserve currency? This is why central banks are buying gold, not because of any single event, but because the system itself is becoming less predictable. The rules change overnight. The laws get reinterpreted. The executive and the judiciary are fighting each other in real time over trade policy. No other reserve asset has this kind of political risk attached to it. Gold has no Supreme Court. Gold has no Section 122. Gold does not expire in 150 days. Now, let me give you my honest take on what I think happens next. Short term, the next 2 weeks are going to be volatile. The Iran deadline creates a binary event. If a deal happens, expect a dip. If strikes happen, expect a spike. If nothing happens and the situation just drags on, expect a slow grind higher. My personal view is that scenario 3 is most likely no deal, no war, just tension, which means gold stays above $5,000 and silver stays above $87. I will tell you why I lean towards scenario 3. Trump has already shown his pattern. He sets aggressive deadlines, he threatens consequences, then he extends the timeline and calls it progress. He did it with China on trade, he did it with North Korea on nukes. He is doing it with Iran now. The 10-day deadline is leverage, not a launch order. The aircraft carriers are there to make the threat credible, not to start a war. At least that is my read. Could I be wrong? Absolutely. And if I am wrong, gold goes to $5,500 in a week. So being wrong here actually helps your portfolio if you are holding. Medium term, the tariff clock is the thing to watch. Those Section 122 tariffs expire in late July. Between now and then, every headline about whether Congress will act creates a new wave of uncertainty. And in the background, the refund battle plays out. Courts deciding whether importers get their money back. Treasury figuring out where to find $175 billion. All of it is noise that keeps gold bid. Long term, nothing has changed about the macro thesis. In fact, everything I am seeing is accelerating it. The debt is growing faster. The geopolitical situation is getting more complex. The legal system is constraining the executive branch's ability to manage trade policy in a coherent way. And the world's central banks are still buying gold at record pace. Goldman Sachs just reiterated their target of $5,400 by end of 2026. I think that is conservative. For silver specifically, the story is even more compelling in my view. Silver has been in a supply deficit for 6 consecutive years. The tariff chaos is disrupting global supply chains, which makes physical delivery harder. The industrial demand from solar and electronics is growing every quarter, and the gold-silver ratio is compressing, which tells you that money is flowing into silver faster than gold on a percentage basis. Let me put a number on that. When gold was at $5,000 and silver was at $77 a few weeks ago, the gold-silver ratio was 65. Gold is now at $5,160, and silver is above $87. The ratio has dropped to about 59. That compression is happening in real time. And historically, when gold enters a major bull market, the ratio compresses hard toward 40 or lower. If that happens, and gold goes to $5,400, like Goldman predicts, silver goes to $135. If gold goes to $6,000, silver goes to $150. Those are not wild guesses. That is just math based on historical ratio compression. Now, I am not predicting those exact numbers, but I am telling you the setup is there. And I want to point out one more thing that nobody is talking about. The Supreme Court ruling specifically exempted critical minerals from the new Section 122 tariffs. Silver is on the U.S. critical minerals list. That means silver imports are not subject to the 15% tariff. Think about what that means. Every other industrial input just got more expensive. Silver did not. That gives silver a relative cost advantage in manufacturing, which means more demand for silver relative to substitutes, which means the supply deficit gets worse, not better. I'm not telling you to buy or sell anything. That is your decision and your money. But I'm telling you that the setup right now, in my opinion, is as bullish as anything I have seen for precious metals. Two simultaneous sources of uncertainty, both structural, not temporary, both reinforcing the same trade, in a market that is pricing it in gradually, not in a panic, which tells me the move has room to run. Every time I look at the data, I come back to the same conclusion. The world is getting more uncertain, not less. And the assets that benefit from uncertainty are gold and silver. The court did not fix the tariff problem. It made it more complicated. Trump did not back down. He escalated with a different legal tool. Iran did not surrender. They are negotiating under a 10-day threat with aircraft carriers off their coast. None of this is resolution. All of it is fuel. The Supreme Court just told the president his trade policy is illegal. He responded in 24 hours with a tariff that expires in 150 days. At the same time, he gave Iran 10 days to make a deal or face strikes. The deadline is approaching. The carriers are in position. The fiscal chaos is accelerating. Gold and silver are both screaming the same message. The system is breaking. Not tomorrow, not next year, right now. Gold at 5,160, silver at 87. Those are not the top, those are the starting line. Because when a Supreme Court can overturn trade policy overnight, and when aircraft carriers are positioning for strikes during a $2 trillion deficit, there's no safe place left except the one asset that has survived every empire, every war, every crisis for 5,000 years. If you want to see what happens when a constitutional crisis and a war countdown collide with $175 billion in refunds and a 150-day tariff expiration, subscribe. Because I will be here every day showing you the exact moment this system breaks completely. This is not hype. This is not prediction. This is documentation of a perfect storm that has already started. Drop a comment and tell me which scenario you think plays out. Iran deal, strikes, or muddle through. And do you think the tariff chaos helps gold more than Iran does? I want to hear from both sides. Share this with someone who holds gold or silver and does not know what just happened. Stay sharp.